I'm going to tell you something about home ownership in retirement that will upset real estate agents, financial planners, and probably your own family. Your house might be your biggest financial mistake. Not because you bought it, but because you're refusing to think about it rationally. I'm Peter Lynch, and I turned $18 million into $14 billion by being ruthlessly logical about investments. And when I look at how seniors treat their homes, often their single largest asset, I see emotional thinking destroying financial security. Today, I'm going to give you the honest truth about whether seniors should own homes as investments, when you should sell, when you should stay, and how to think about this decision without letting sentiment bankrupt your retirement. Let me start by destroying a myth that's been sold to Americans for generations. A home is always a good investment. It's not. Sometimes it is, often it isn't. And for seniors specifically, it's frequently a financial albatross disguised as security. Here's the reality. An investment is something that produces income or appreciates in value at a rate that exceeds your costs. A home you live in does neither reliably. Yes, it might appreciate, but it also costs you money every single month in property taxes, insurance, maintenance, utilities, and opportunity cost. When you add up all those costs over decades, the appreciation often barely keeps up with inflation. For seniors specifically, the home ownership question becomes even more complicated. You're not in wealth building mode anymore. You're in wealth preservation and distribution mode. You're living on fixed income, Social Security, pensions, retirement savings. Every dollar you spend on housing is a dollar you can't spend on healthcare, travel, family, or emergency funds. Yet I constantly see seniors who are house rich and cash poor. They live in homes worth $500,000, $800,000, sometimes over $1 million. And they're stressed about money. They're cutting back on necessities. They're worried about one major expense wiping them out. Meanwhile, they're sitting on a massive asset they refuse to monetize because of emotional attachment. That's not investing. That's hoarding. And it's destroying their quality of life. Most seniors dramatically underestimate what their home actually costs them. They think, well, my mortgage is paid off, so the house is basically free. That's terrible logic. Let me break down the real costs. Property taxes. Depending on where you live, these can be $5,000, $15,000, or more annually. That's money going out every year, forever, just to keep the government from seizing your property. Insurance. Homeowners insurance, flood insurance if you're in a risk zone, umbrella policies. Easily $2,000, $5,000 per year or more for a valuable home. Maintenance and repairs. The rule of thumb is 1 to 2% of home value annually, so a $500,000 home costs you $500 to $10,000 per year on average in maintenance. New roof, HVAC system, plumbing issues. These costs don't stop just because you're on fixed income. Utilities, heating, cooling, electricity, water, gas. Large homes are expensive to keep comfortable, easily $3,000 annually or more depending on climate and home size. Lawn care and services. If you can't do it yourself anymore, and many seniors can't, you're paying someone to mow, rake, shovel snow, clean gutters. Another $2,000 to $4,000 annually. Now add it up. A $500,000 home might cost you $20,000 to $35,000 per year just to maintain. That's $1,700 to $2,900 per month, and you're getting zero income from it. Compare that to renting. You could rent a nice apartment or condo for $1,500 to $2,500 per month, depending on location. All maintenance is handled, no property tax bills, no surprise repair costs, and you'd free up that $500,000 in home equity to invest in assets that actually produce income. Let's say you sold that $500,000 home, rented for $2,000 per month, and invested the proceeds in a diversified portfolio of dividend-paying stocks yielding 4%. That's $20,000 in annual income. After paying rent, you still have $4,000 extra per year, plus your principal is still intact and likely growing. But most seniors never do this math. They just know they own their home and renting feels like throwing money away. That's emotional thinking, not rational analysis. Now, I'm not saying every senior should sell their home. There are situations where keeping it makes perfect sense. Let me outline when homeownership works for retirees. First, if you have ample retirement income and the home costs are not a financial strain. If your Social Security, pension, and investment income comfortably cover all your expenses, including the true cost of home ownership, and you love the home and neighborhood, then staying makes sense. The home provides stability, familiarity, and emotional value that outweighs the financial inefficiency. Second, if you've downsized appropriately and your housing costs are reasonable, maybe you sold the big family home and bought a smaller place with cash. Your property taxes are manageable. Maintenance is minimal. This can work well. Third, if you have long-term care insurance or substantial assets beyond the home. If something happens, a medical emergency, need for assisted living, whatever, you won't be forced into a fire sale of the home under duress. You have other resources to draw on. Fourth, if you're in a genuinely appreciating market and the home is part of your estate plan. Maybe you're in an area with consistent above-inflation appreciation. You intend to leave the home to heirs who want it. In that case, holding it can make sense as an inflation hedge and legacy asset. But notice what all these scenarios have in common: financial flexibility. The home is not creating financial stress. It's not the only asset. It's not preventing you from living the retirement you want. Here are the situations where selling makes overwhelming financial sense, yet I see seniors stubbornly holding on out of emotion. First, when you're house rich but cash poor. If your home represents more than half your net worth and you're constantly worried about money, you need to sell. Period. There's no rational justification for living in financial anxiety while sitting on a massive asset. Let me give you a real example. I knew a couple in their 70s. Their home was worth $700,000. Their retirement savings were about $200,000. They were living on $3,000 per month, Social Security plus some pension income. Their property taxes alone were $12,000 per year. They needed a new roof, $25,000. They were deferring medical procedures because they couldn't afford the copays. I told them, sell the house, move to a modest rental, invest the proceeds. They'd have nearly $900,000 in liquid assets producing income, plus they'd eliminate the property tax and maintenance burden. Their quality of life would improve dramatically. They refused. This is our home. We raised our kids here. We can't leave. So they stayed. They're now in their 80s, still stressed about money, still struggling. Their adult children are going to inherit a house they'll immediately sell, and probably wish their parents had lived better in their final years. That's not wisdom. That's stubbornness destroying quality of life. Second, when you can't maintain the property anymore. If you're hiring out everything, lawn care, cleaning, repairs, because you physically can't do it yourself, the home is no longer serving you. You're serving it. Sell. Third, when the home is too large for your needs. If you're rattling around in a 4-bedroom house because your kids moved out 30 years ago, you're paying to heat, cool, insure, and maintain space you don't use. Downsize or rent something appropriate to your actual needs. Fourth, when you're in a declining market or high-tax area. If property values in your area have stagnated or declined, or if property taxes keep rising faster than your income, you're in a wealth-destroying situation. Sell before it gets worse. Fifth, when the home is preventing you from doing things you want. I see this constantly. Seniors who want to travel, spend time with grandchildren in other states, pursue hobbies, but they can't because they're tied to a house. The house has become a prison, not an asset. Here's where I need to be brutally honest. Your memories of raising your children in that house are not a financial return. Your emotional attachment to the neighborhood is not producing income. Your identity as a homeowner is not paying for your health care. I understand the emotional component. I've lived in the same house for over 60 years. I get it, but I can afford to indulge that emotion. I'm not sacrificing my financial security or quality of life for it. Many seniors are. The question you need to ask is, what is this emotional attachment costing me? If staying in your home means you can't afford to visit your grandchildren, is that a good trade-off? If it means you're stressed about money constantly, is that worth it? If it means you're cutting back on health care or nutrition, is the house really serving you? Your children don't care about inheriting your house. Survey after survey shows adult children would rather their parents live well and enjoy retirement than scrimp and save to leave them real estate. They'd rather have more time with happy, financially secure parents than inherit a house they're going to sell anyway. And here's another uncomfortable truth. If you hold the house until you die, your heirs get a stepped-up basis. They can sell it immediately with minimal or no capital gains tax. But if you sell it now, you might face significant capital gains taxes depending on how much it's appreciated. From a pure tax perspective, sometimes holding until death makes sense, but tax planning shouldn't override quality of life. Saving on capital gains taxes so you can leave more to your kids while you live in financial stress is backwards. Your retirement is for you, not for them. Let me address reverse mortgages because I know some seniors consider this as a way to stay in their home while accessing equity. Be very careful here. Very careful. A reverse mortgage lets you borrow against your home equity, receiving monthly payments or a line of credit. You don't have to repay until you move out or die. Sounds great, right? Here's the problem. Reverse mortgages are expensive. The fees are high. The interest rates are typically higher than conventional mortgages, and the interest compounds, eating away your equity. Over time, you might end up owing more than the home is worth, especially if home values stagnate or decline. Reverse mortgages can make sense in specific situations if you absolutely must stay in the home for health or other compelling reasons, and you have no other way to access needed cash. But as a general strategy, I'm skeptical. Usually, you're better off selling the home, investing the proceeds, and renting. You'll have more flexibility, more liquidity, and often more total wealth over time. If you're emotionally attached to home ownership but recognize you need to reduce costs, downsizing is a middle ground worth considering. Sell the large family home. Buy or rent something smaller and more manageable. Pocket the difference. This strategy works well if you execute it properly. The keys are: 1. Actually downsize. Don't sell a $600,000 home and buy a $550,000 condo. That's not really downsizing. Sell the $600,000 home and buy a $300,000 or $350,000 place, or rent for $1,500 to $2,000 per month. Bank the difference. 2. Move to a lower cost of living area if possible. Some seniors stay in expensive markets, California, New York, Boston, out of habit. If you move to a lower cost state, your money would go much further. Property taxes alone could drop by 70%. 3. Prioritize low maintenance. Buy a condo or townhome where the HOA handles exterior maintenance. Choose newer construction that won't need major repairs for years. The whole point of downsizing is reducing costs and hassle. 4. Be realistic about the ongoing costs. Make sure you can truly afford the downsized home comfortably. Too many seniors downsize, but still end up house poor because they didn't downsize enough. There's a stigma in America around renting in retirement. People think you failed if you don't own your home outright by retirement. That's nonsense. Pure cultural mythology with no basis in financial logic. Renting in retirement can be brilliant if done right. Here's why. Flexibility. You're not tied to one location. Want to spend winter in Florida and summer near your grandkids? You can do that when you rent. You're mobile. Predictable costs. Your rent is fixed, subject to increases, but predictable. No surprise $15,000 roof replacement. No HVAC system dying. All that is the landlord's problem. No maintenance burden. Something breaks? Call the landlord. You're not climbing ladders at 75 to clean gutters. You're not dealing with contractors and permits. Liquidity. Your wealth is in liquid, income-producing investments instead of locked up in an illiquid house. You can access money if you need it. You can't easily access home equity without selling or taking out expensive loans. Better locations. Often you can rent a nicer place in a better location than you could afford to buy. You get to enjoy prime real estate without the carrying costs. The financial math often strongly favors renting for retirees. But the psychological barrier is huge. "I'm not throwing money away on rent," is the refrain I hear constantly. But you're not throwing money away. You're buying housing services with predictable costs and no maintenance obligations. That's valuable. Meanwhile, homeowners are throwing money away on property taxes, insurance, repairs, and opportunity cost. They just don't see it that way because the costs are less visible. If I were retired today with a paid-off home worth $500,000 or more, and I didn't have overwhelming sentimental reasons to stay, here's what I'd do. I'd sell the home, pay the capital gains tax if any. Remember, you get to exclude $250,000 per person of capital gains on a primary residence if you've lived there 2 of the last 5 years, so $500,000 for a married couple. Take the proceeds. I'd rent a nice apartment or condo in a location I actually want to live, not just where I happen to have a house. Maybe a walkable downtown. Maybe near family. Maybe in a warmer climate if I'm tired of cold winters. I'd invest the home sale proceeds in a diversified portfolio. 40% in an S&P 500 index fund for growth, 40% in dividend-paying stocks and bond funds for income, and 20% in cash and short-term securities for stability and emergencies. At a 4% withdrawal rate, $500,000 produces $20,000 annually. That covers a lot of rent while leaving the principal largely intact. Plus, Social Security and any other retirement income covers living expenses. I'd have eliminated property tax, maintenance, and homeowner stress. I'd have gained flexibility and liquidity. Would I miss owning? Maybe. But I'd miss financial anxiety more. I'd miss being tied down more. I'd miss spending my final good years maintaining a house instead of living life. A few additional factors seniors need to consider when thinking about home ownership. Healthcare proximity. As you age, proximity to quality healthcare becomes more important. If your home is far from good hospitals or doctors, that's a risk. Sometimes moving closer to healthcare is worth more than staying in a familiar home. Social isolation. Many seniors are isolated in suburban homes where they can no longer drive. They're stuck. Renting in a walkable area with public transit and amenities can dramatically improve quality of life. Future care needs. If you might need assisted living or nursing care in the future, having liquid assets instead of home equity makes that transition easier. You can't pay for memory care with a house. You can pay with investments. Estate planning. If your goal is leaving maximum wealth to heirs, the math can favor keeping the home until death for the stepped-up basis. But again, don't sacrifice your quality of life for inheritance tax planning. Inflation hedge. Real estate can be an inflation hedge, but so can stocks, REITs, and tips. The inflation protection argument for keeping a home isn't as strong as people think. Here's my bottom line advice. Treat your home the same way you'd treat any investment. Dispassionately, analytically, based on numbers, not emotion. Ask yourself, if I sold this home today, invested the proceeds, and rented, would I be financially better off? Would I be happier? Would I be less stressed? If the answer to those questions is yes, then you should seriously consider selling. Don't stay in a home because you think you're supposed to own in retirement. Don't stay because you're afraid of what neighbors or family will think. Don't stay because you've always been a homeowner and can't imagine being a renter. Those are emotional, not rational reasons. I made my fortune by being ruthlessly logical about investments, by not letting sentiment cloud my judgment, by asking what makes financial sense, not what feels comfortable. Your home is likely your largest asset. It deserves the same analytical scrutiny you'd give any major investment. Maybe when you run the numbers, keeping it makes sense. Great, keep it and enjoy it. But if the numbers say you'd be better off selling, and the only reason you're staying is emotion or inertia, you're making a mistake. A potentially expensive mistake that could undermine your financial security and quality of life in retirement. You spent decades building wealth. Don't let irrational attachment to a physical structure destroy that wealth in your final years. Be smart. Be logical. Be willing to make the hard decision if it's the right decision. Your retirement should be about living well, not about maintaining a house that maintains you. Choose wisely.